Forgot the 1980 scam? Vijay Kedia's warning, everyone's running after silver. Just imagine. You wake up one morning to find that everything you invested your hard-earned money in has suddenly lost 80% of its value overnight. That dream which was supposed to make you rich has now turned into a nightmare. This is exactly what happened in 1980, when investors around the world made the biggest mistake of their lives. Silver prices were skyrocketing, and everyone was madly chasing the idea of getting rich quick. But then came one Thursday morning that history will never forget, Silver Thursday. That day, billionaires were wiped out, banks collapsed, and millions of people lost everything. And now, 4 decades later, legendary investor Vijay Kedia has issued a fresh warning. History may repeat itself. Vijay Kedia, a name that needs no introduction. An investor who entered the stock market at just 17 years old and turned his sharp understanding into not just crores, but billions. But today, the Sam Kedia, who can read the market like an open book, is saying, don't get greedy with silver and gold. Why? Because he knows that beneath every bull market hides a silent scam. In a recent interview, he said, people forget. They forget what happened in 1980. He clearly stated that although he himself holds silver ETFs and gold bonds, he doesn't want to invest even one more rupee at current prices. Why? Because he's seeing the Sam FOMO, the fear of missing out, that existed 4 decades ago when the Hunt brothers bought 1/3 of the world's silver supply. Kedia said, even in the bullion market, people have brought the Sam madness that we see in stocks. Everyone's afraid of missing the opportunity. But he warns, when everyone is buying, that's exactly when pausing for a moment is the smartest move. Now let's go back to the story Vijay Kedia reminded everyone of, the 1980 silver scam. It was the 1970, and the value of the US dollar was falling. 2 oil tycoon brothers, Nelson Bunker Hunt and William Hunt, feared that the dollar was no longer reliable. They thought, if paper money loses its worth, the real money will be silver. So, they took huge bank loans, brought in partners, and started buying silver from all over the world. Soon, things got out of hand. 1/3 of the world's silver was owned by just these 2 men. The market went into a frenzy. Silver prices shot up from 1.5 per ounce to $50 per ounce by 1980. Everyone believed that those who didn't buy silver now would regret it for the rest of their lives. But then came March 27, 1980, a date written in blood in the history of Wall Street. When the US government realized that the market had gone out of control, it imposed the sell-only rule, meaning traders could only sell silver, not buy it. Banks demanded that the Hunt brothers repay their loans, but they didn't have the cash. And then, exactly what Kedia warns about today happened. Silver crashed from $50 to $10 per ounce, an 80% drop within weeks. People who had been smiling the night before, watching their ETF prices rise, woke up the next morning buried in debt. Vijay Kedia says, people assume gold and silver are the Sam. But that's their biggest mistake. He explained that while gold has risen 10x in rupee terms over the past 40 years, silver still hasn't fully recovered to its 1980 peak. Imagine, 4 decades later, it's only now nearing the Sam price levels. That means those who bought silver at the top in 1980 have only just broken even after 40 long years. So the question is, could it happen again? Kedia says, yes, absolutely. If people shut their eyes in greed. Today, social media, news channels, and YouTube are all hyping silver. Everyone's saying its industrial use is growing in electric vehicles, solar panels, and technology. That's true, Kedia admits, but he warns, even the right facts can become dangerous when they turn into blind optimism. He believes that both gold and silver have their own importance. But true investment wisdom doesn't lie in what metal you buy, rather when you buy it, how much you buy, and why you buy it. Because every bull run has an end, every hype eventually fades, and not everything that glitters is gold. Vijay Kedia admits that his stock market returns have been steady for the past year, yet he's content, because he knows that in the stock market, patience itself is the biggest profit. He said, people think money is safe in ETFs or bullion. But the truth is, real safety lies only in what you truly understand. Kedia's statement isn't just a warning, it's a lesson that the market never moves according to your plan. It moves according to the crowd's emotions, which swing constantly between greed and fear. He said, have patience for the next 5 to 6 months. Opportunities are forming in large caps. And once the economy gains momentum, mid-caps and small caps will take off again. In other words, don't let FOMO push your portfolio into a shiny trap. Now think about this. If you buy 1 kilogram of silver today at 80,000 and tomorrow its price drops to 60,000, will you be able to hold it? Most people won't, because people don't invest, they follow trends. And it's exactly these trends that Kedia warns against. In 1980, what the Hunt brothers did was not just market manipulation. It was a psychological trap, the fear of missing out. That same fear has returned today, this time in the form of ETFs, viral social media posts, and catchy slogans like Gold Silver Rally. But the difference is, today's market is digital, where hype spreads faster and crashes even faster. A single tweet, one headline, or one analyst report, and the entire silver chart can flip overnight. Kedia's experience teaches one clear lesson. The market is always right. Humans are not. He says, when everyone is talking about buying, the one who sells is the truly wise investor. Now, let's look at how the Hunt brothers' silver scam finally collapsed. When they started selling their holdings to repay their massive debts, prices crashed even further. They had over 100 million ounces of silver in their possession. They were billionaires, but that crash turned them into debtors. Their losses were so enormous that the Federal Reserve had to step in to stabilize the US financial system. Several banks were pushed to the brink of collapse. After that, exchanges around the world introduced position limits and tighter margin controls to ensure that no individual or group could ever again capture the market the way the Hunt brothers did. Today, 4 decades later, the same story could repeat, but in a digital form. Now we have influencer investing, where YouTube, Twitter, and Telegram channels play with people's trust. Everyone is showing a new silver boom, flashing charts and graphs claiming that silver will hit $100 per ounce. But no one talks about how many people will drown along the way. Vijay Kedia says, the most dangerous thing in the market is half knowledge. It gives you confidence, but not safety. From his own experience, he knows that emotions are the biggest enemy in investing. He once said, if you sell out of fear or buy out of greed, you've already lost the game. Today's investors must remember, the market is a marathon, not a sprint. Whether silver or gold prices rise or fall, no one truly knows. But one thing is certain, history always punishes those who forget it. And that is the soul of this story. Vijay Kedia is reminding us of the lesson from 1980. He's saying only those who can stay calm during a fall survive in the market. According to him, India's economy is currently at one of its strongest phases. In infrastructure, manufacturing, banking, and technology, everything is moving upward. In such a time, if investors chase only metals, they'll miss the real growth. He believes that India's true wealth creation will happen through equities, not bullion. Now, the question arises, are silver ETFs really risky? An ETF, exchange traded fund, tracks the price of silver or gold. People assume it's safe since it doesn't require physical storage. But when the market crashes, ETFs fall just as fast. And the biggest problem, it's easy to become emotionally attached Because buying and selling happens in just one click. That means greed rises faster. And fear does too. Vijay Kadia's advice is clear. Don't get into what you don't understand. And if you do, move with a plan. Decide your exit before you enter. He once joked, there are two kinds of people in the market. Those who learn and those who teach. But both have the same teacher, the market itself. He says that today's time demands balance, not emotion. A little gold, a little silver, but greater trust in stocks and business growth. And if you're wondering, so should we not invest in silver at all? The answer is, invest, but only as much as you can afford to lose without losing sleep. Because there's an old saying in the market, don't put all your eggs in one basket. Vijay Kadia's own story is a reflection of that philosophy. He never blindly trusted one sector or one company. He always diversified. And that's why, with every fall, he came back even
If
stronger.
our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.